Yes. This is fixed asset turnover ratio. You can see here. Revenue from operation or COGS divided by fixed assets. Okay. We have done some question here. Yes. Working capital turnover ratio question, and it is inventory. No, average trade payable ratio. Yes. So our fixed asset turnover ratio is completed now. Now we will discuss net asset turnover ratio. Net asset turnover ratio. So you mean you know the meaning of fixed assets, you know the meaning of current assets. Can you tell me the meaning of net assets? Ritika, can you tell me the meaning of net assets?
Sir, I'm not sure.
Okay. And you know the meaning of total assets and external liabilities?
Total assets, I know, sir. External liabilities.
Yes, external liabilities.
No, sir.
Okay. External liabilities are actually, we have two types of liabilities, internal liabilities and external. Internal means like capital, shareholders, funds, reserve and surplus. These are called internal liabilities. Okay. And the external liabilities means the amount borrowed from some outside person.
Okay, sir.
Okay. Okay, so when we have to calculate net asset turnover ratio, then we deduct our liabilities from our assets. It is called net asset turnover ratio. Okay, so the formula of net asset turnover ratio is net, sorry, not net sales, it is revenue from operation, revenue from operation or cost of goods sold if it is not given. So revenue from operation divided by net assets. Actually, the working capital turnover ratio, the fixed asset turnover ratio, if you see the formula of these ratio, you will see the similarity between these. It is also same, revenue from operation divided by fixed assets. The working capital turnover ratio is also almost same. Capital, yes, the working capital turnover ratio equals to 30 lakh. Yes, revenue from operation divided by working capital. So in this ratio, it is also same, revenue from operation divided by net assets. Okay. Now, you know the meaning of revenue from operation, it is sales, but it is net sales actually. Okay.
Yes, sir.
Okay. Can you tell me how to calculate the net assets? Sorry, net sales.
So, cost of goods sold minus gross profit.
Okay. Cost of goods sold minus
Gross profit.
Okay. Cost of goods sold is cost of the items sold. Okay. So generally sale price is higher than cost of goods sold. If you deduct profit from cost of goods sold, then it will be very low amount in comparison to sales.
Sorry, plus gross profit.
Okay, actually net sales, revenue from operation or net sales equals to total sales minus sales return. Okay. This is the formula of net sales or net revenue from operation. Is this clear?
Yes, sir.
Okay. The sale figure, revenue from operation equals to cost of goods sold plus profit. So net sales, we have to deduct sales return from total sales. We will get net sales. Now, what is net assets? So net assets equals to total assets minus liabilities. So you will get net assets. Okay.
Yes, sir.
So actually, in my book, there is no portion related to net asset turnover ratio. It is a little old. So I told Banisha to send me the portion. Actually, let me check. No, I haven't received. Okay, can you send me a pic of the portion in chat here? The net asset turnover ratio portion.
Yes, sir.
Okay, leave it. Actually, we will discuss these portions in our next class. Okay, let's discuss first the portion we have. Actually, it will take time to send the portions. So let's take some other topic and we'll discuss the net asset turnover ratio in our next class. Okay.
Okay, sir.
Okay. So profitability ratio, the fourth classification of ratio is profitability ratio. Now, what is profitability ratio? What is profit? Ritika, what is profit?
So a profit is the I'm not sure how to explain it.
Okay, actually, the profit is the main outcome of any business. You can say the result of any financial year. Okay. So whenever we start a business, we do a business, the main objective of our company, of our management or employee is to earn profit. Yes.
Yes, sir.
Okay. Now, how do we calculate the profit of our business?
So the total revenue we earn minus our expenses.
Total revenue minus expenses. Actually, for that, our statement of profit and loss. Okay.
Okay, sir.
Okay. So if we are preparing our statement of profit and loss, it only tells us that how much profit we have earned. Okay. There is no specific information or no comparison of these profit. We cannot know that our profit is sufficient or not. Yes.
Yes, sir.
Like if you have invested in your business like 1 lakh rupees, okay, and you calculate the profit and it is around, let's say, 200 rupees. You have invested 1 lakh rupees and you earn 200 rupees, okay, as a profit in a year.
Okay, sir.
Okay, so can you tell me it is sufficient or not?
It's not sufficient.
Not sufficient. Okay, so how do you decide this, that profit is insufficient?
Because the profit we earned is less compared to the money we invested.
Yes, in comparison to our invested amount and the time period, it is very less. Yes, that's why you said that profit is insufficient. But if I tell you that we have invested only 1,000 rupees and we get 200 rupees as a profit, then it is sufficient or not?
So no,
Yes,
it's not sufficient.
not sufficient. Why? Actually, you have invested only 1,000 and
Yes,
you
sir.
200. So it is like 80% profit. Yes.
Yes, sir.
So in comparison to bank interest rate, you are earning higher profit. Yes or no?
Yes, sir.
So it is
Okay,
somehow
sir.
sufficient.
Okay, sir.
Okay. And what if you have invested only 200 rupees and the return from that business is also 200 rupees? Sufficient or insufficient?
Sir, it wouldn't be profit if we get back the same amount we invested.
Can you repeat your sentence?
It wouldn't be profit if we get back the same amount we invested in.
Yes, profit is the same as we invested. Yes. We have invested 200 rupees and we are getting 200 profit. So is it, what do you think? Is it sufficient or not?
It is.
Yes, it is, because I told you that you have invested 1,000 rupees and you get a profit of 200 rupees. It is also sufficient. So now we are investing very less amount and we are getting the same amount of profit. So it is sufficient. Now, so if we compare these three figures, we can see that in first case, we are earning very less, so it is insufficient. It is somehow sufficient and it is very good. Okay. So by comparing the invested amount into the business with the profit earned, we are saying that profit is good or not. Yes or no?
Yes, sir.
But when we calculate the profit in a statement of profit and loss, we calculate our net profit after tax. Okay. So in that case, you cannot decide there that our surface profit is sufficient or not, because you don't know the invested amount. So for a simple person who don't know much about accounting, we need to provide information in a manner that he can understand that business is earning sufficient profit or not. For that, we calculate profitability ratio. Is that clear?
Yes, sir.
Okay. So ratio is used for presenting the data in simplistic form, in very easy form, so that everyone can understand. So profitability ratio is also to present the profitability of business in a form that everybody can understand the business is earning sufficient profit or not. Okay.
Yes, sir.
Okay. Now, how many types of profit you know?
So gross profit, net profit.
Yes, gross profit, net profit, and operating profit.
Yes, sir.
Actually, you have studied this operating profit concept in 11th, I think. Yes, so I'm sharing the ratio, profitability ratio. Yes. You can see one of the main objective of any business enterprise is earning profit. Therefore, profitability of a business is a good measure of efficiency of any business enterprise. So we know the gross profit, operating profit, and net profit. So these are written here as a ratio: net profit ratio, gross profit ratio, operating ratio. Now, the first thing, we can compare our profit with two things. The first one is amount invested in business, and the second is sales. Yes or no?
Yes, sir.
Is there any other item you think that is related to profit?
The expenses.
Expenses. Okay. Yes, expenses is related to profit, but we cannot use them in as a base in profitability ratio, because whenever we calculate profitability ratio on the basis of expenses, it will give you more percentage. Like if you compare your profit with expenses, then you will get like total expenses in comparison to revenue. You will get the higher ratio in comparison to expenses. Okay, so it is not viable for calculating our profitability ratio on the basis of expenses. Okay, so we calculate our profitability ratio on the basis of sales, gross profit ratio on the basis of sales, operating profit ratio on the basis of sales, and these two also sales. So these are on the basis of sales, and the last one is capital employed, on the basis of capital employed. Okay.
Yes, sir.
Okay. Now let's think about your suggestion as expenses. Now, gross profit ratio formula, you know, it is sales, net sales minus COGS. Yes, cost of goods sold.
Yes, sir.
Okay. So if we compare it with sales, generally we compare our gross profit with sales, but sometimes we compare our gross profit also with COGS. It is expenses. Yes.
Yes, sir.
So if we are doing sales, if we are making sales, then we are earning profit. Yes, the reason behind profit is sales. Yes.
Yes, sir.
Okay. For this sale, the COGS is required. You can say it that for selling goods, we need to expense some cash or amount. Yes. So that is our COGS. Now, if we compare gross profit with sales, or if we compare gross profit with COGS, the ratio will be somehow little different. Like if we calculate gross profit on sales, it will be 20%. If we calculate gross profit in the same situation, if we calculate gross profit on COGS, it will be 25%. Okay, so there is no much difference between these two. So that's why we use generally sales, because gross profit is related to sales. If we are making sales, then we are earning profit. Okay.
Yes, sir.
Okay. Now, if you have seen, like first four ratio is related with sales, and the last one is related with capital employed. Now, if we talk about gross profit ratio, first of all is gross profit ratio. So here it is, gross profit ratio. You can see it shows that how much profit earned by a company on net sales. This ratio indicates the efficiency of enterprise in the area of production, sale, purchase, and other operating areas. Okay.
Yes, sir.
So what does it mean? Like if you remember trading account.
Yes, sir.
Okay, so in trading account, we prepare our trading account and calculate gross profit. In a new version of a statement of profit and loss, we don't calculate gross profit. Yes or no?
Yes, sir.
So if you prepare the statement of profit and loss as per new method, then there will be no gross profit and you cannot calculate gross profit ratio by that method. So for calculation of gross profit ratio, you have to use the old concept, like you have to write sales, closing stock, opening stock, and then cost of goods sold, and then calculate gross profit. Then you can only calculate gross profit ratio. So you can see the formula: gross profit into 100 divided by average trade receivable. Actually, the formula is a little incorrect here. Let me correct it. Okay, this is not average trade receivable. It is net sales. Okay, so gross profit ratio equals to gross profit into 100 divided by net sales. This is our formula. But in some of the question, it will be given like gross profit percentage will be given and it is on cost, not on sales. Okay, in that case, you have to calculate like cost or you have to calculate sales price, sale value. So the formula can be given on cost also. So gross profit ratio equals to gross profit into 100 divided by net sales, and there is formula of gross profit revenue from operation minus cost of revenue from operation, or you can say net sales minus cost of goods sold. And cost of revenue from operation, you know the formula: opening inventory plus purchase plus direct expenses minus closing inventory. So this is our formula of gross profit ratio. So I think we have studied this before, so I don't think there should be any doubt. But if you have, you can ask questions. I will solve a question of this gross profit ratio. Do you have any doubt?
No, sir.
Okay. Okay, so there is a question given here. I'm writing the information. Question number, it is 115. Okay, so cash sales is given. It is 20% of total sales. Total sales. And credit sale is also given. It is 5 lakh. Purchase 4 lakh. And excess of closing stock over opening stock. This is our quotient. Is 25,000. Now we have to calculate gross profit ratio from these information. Gross profit ratio. Now read the question and decide that what we will calculate first. Cash sales is given, it is 20% of total sales. Credit sale is given 5 lakh. Purchase is 4 lakh. Excess of closing stock over opening stock. Okay.
Okay, sir.
So what we have to do first?
So we have to find total sales.
Yes, we have to calculate total sales because the formula for this type of decision, you have to see the formula of gross profit ratio. What it says, the gross profit ratio equals to gross profit divided by net sales into 100. Yes?
Yes, sir.
Yes. Now, for calculation of gross profit, you need net sales and cost of goods sold because gross profit equals to net sales minus cost of goods sold. So let me write these formula first. We have to calculate gross profit ratio. The formula of gross profit ratio is gross profit divided by net sales into 100. Now, for gross profit calculation, the formula is net sales minus cost of goods sold. So net sale is required in both of the formula. So we will calculate first net sales. This is our first step. And then we will calculate cost of goods sold. Second step. And after that, our gross profit will be calculated automatically. Okay. So first of all, net sales. Total sale, actually there is no sales return. So total sale is also net sale here. Total sale is not given in the quotient because cash sale is 20% of total sale and cash sale is also not given. So credit sale is given. Can you calculate total sale on the basis of credit sale? Yes or no? You just have to tell me yes or no.
Yes, sir.
Okay. So yes, we can calculate total sale on the basis of credit sale. How? Because cash sale is 20%. So total sale is always 100%. If cash sale is 20%, then credit sale is 80%. Yes or no?
Yes, sir.
Okay. So 5 lakh is 80%. Credit sale divided by 80%. So it will be calculated. Let me calculate it. 5 lakh divided by 80%. It is 6,25,000. Okay.
Okay, sir.
So our total sale is calculated. Cost of goods sold. The second information that we have to find is cost of goods sold. Now, in this portion for cost of goods sold, we use opening stock, closing stock, and purchase. And if direct expenses is given in the portion, then we will use it. Otherwise, we will ignore direct expenses. So opening stock is not given and closing stock is also not given. Okay, but it is given excess of closing stock over opening stock is 25,000. Now, let's see how the formula will use this information. Opening stock plus purchase minus closing stock. So it is saying that closing stock is more than opening stock. Yes?
Yes, sir.
But here, if you can see, we are actually using opening stock minus closing. If we remove purchase from here, then purchase plus. It is opening stock minus closing stock. But the question is saying that closing stock is more than opening stock. So it will result in negative Okay, so purchase is 4 lakh in the quotient, and actually no, not plus, it will be minus 25,000. Is this clear?
So how did we get 25,000?
Yes. If quotient is saying that opening stock is more than closing stock, let's say if quotient says that opening stock is 25,000 more than closing stock, it means like this: 1,25,000 minus 1 lakh. It will result in the same concept, like 25,000 more than closing stock. Yes.
Yes, sir.
But it is saying that closing stock is in excess of opening stock, means closing stock is more. So you can say that opening stock is 1 lakh and closing stock is 1,25,000. So it will result in minus 25,000. Yes or no?
Yes, sir.
Yes. So that's why this plus sign, plus and minus, becomes minus. Okay.
Okay, sir.
It is clear now.
Yes, sir.
Okay. So the cost of goods sold is 3,75,000. Now we know the net sales and cost of goods sold. We can calculate gross profit. Gross profit equals to net sales, that is 6,25,000, minus cost of goods sold, that is 3,75,000. Now it will be 2,50,000, the gross profit, and then we will calculate gross profit ratio. So you know the formula of gross profit ratio. It is gross profit divided by net sales. 2,50,000 divided by net sales, that is 6,25,000, into 100. It will be like 125. Yes. If we cut it with 6,50,000 to 6,25,000 into 100, it is 40%. Okay.
Okay, sir.
This is our gross profit ratio. Now I repeat the solution once again. In this quotient, total sales, cost of goods sold, or gross profit, nothing is given. Okay, we have to calculate all of these. So as per the formula, we first have to calculate net sales, cost of goods sold, and gross profit. So for calculation of net sale, we used credit sale information, because cash sale is 20%. So it means credit sale is 80% of total sales. Okay. So if 5 lakh is 80%, then total sale will be 6,25,000. If you calculate by this 5 lakh divided by 80%. Okay. If cash sale was given in the quotient, then we will divide the amount of cash sale by this 20%. So you will get total sale in that case also. Okay. Now, when we calculated our net sales, we calculate cost of goods sold by using purchase and excess of closing stock over opening stock. So we used this information as in negative form, and we deducted it from purchase. So 4 lakh minus 25,000. But if the quotient will tell you that excess of opening stock over closing stock, then you will add this amount. Okay, but here it is deducted. So 3,75,000. Then we calculated our gross profit 6,25,000 minus 375, 250, and then we calculate gross profit ratio, which is 40%. So I think this clear now.
Yes, sir.
Okay, so now there is a next concept. I will give you some homework on the basis of this. Next concept is net profit turnover ratio. Sorry, net profit ratio. not turnover, net profit ratio. Now, net profit is also related to sales. Okay, so if we say the definition, so net profit ratio tell us the relationship between net profit and net sales. Okay, the formula for net profit ratio is net profit divided by net sales. You can see here the second is actually, yes, it shows the relationship between net profit and revenue from operation. In other words, how much profit before tax is earned on revenue from operation. Okay, so net profit into 100 divided by revenue from operation. How we calculate net profit, it is the important factor here, because in question you will be given sometimes sales, you will be given gross profit, and then other expenses, cost of goods sold. So you have to find out what is our net profit. Okay, so for that calculation purpose, we will use this formula: gross profit plus other income minus indirect expenses. Actually, if you remember the trading account and profit and loss account, you will remember this concept. Let me just write it here so that we used to write here sales, closing stock, opening stock, purchase, direct expenses, and then we
So could you repeat? You were stuck.
remember this trading account.
Yes, sir.
Okay, so if you see this concept, actually there is one sales here, okay, and opening stock plus purchase plus direct expenses minus closing stock. What is this formula called?
The cost of goods sold.
Yes, so sales minus cost of goods sold equals to gross profit. Yes.
Yes, sir.
Okay, now we transfer gross profit here. We write all other income, okay, like commission, interest, other income is written here, and all the indirect expenses or other expenses is written here. Okay, so you can see here gross profit plus other income minus indirect expenses is our net profit formula. But if gross profit is not given in the quotient, then sales minus cost of goods sold, or you can say sales plus other income minus cost of goods sold minus indirect expenses. Yes.
Yes, sir.
So here revenue from operation plus other income minus direct expenses. This is your cost of goods sold, and then minus indirect expenses.
Got it, sir.
Okay, so this is our net profit ratio. I'm solving a net profit ratio question also. Yes, it is actually very small question given. Revenue from operation is given, net sales 6 lakh, net profit is 60,000. It is very simple. Okay, yes, the question I found it. Okay, so hey, the question is saying to you that cash sale is given. It is 2,20,000. Credit sales, it is 3 lakh. There is sales return 20,000, and gross profit is given 1 lakh. Operating expenses Operating expenses 25,000 and non-operating expenses 5,000. There is a non-operating income also. Non-operating income. Now, can you calculate this ratio if you understood the concept? If not, I will explain the question and solve it.
Sir, I'll try.
Okay, please try. So you have to calculate net profit ratio. These are the information. Cash sale, credit sales, sales return, gross profit, operating expenses, non-operating expenses, and non-operating income.
Sir, done.
Okay, so how much you got?
I got 25%.
25%. Okay. So how we got 25%?
Sir, so first, I got net sales as 5 lakh. I found out total sales and I deducted sales return from it. And for the net profit, I added 1 lakh, which is gross profit, plus non-operating income 30,000 minus non-operating expense. And then I got net profit as 1,25,000.
Why you didn't deducted this?
So because we had to deduct only indirect expenses, right? Operating
Direct
expenses.
expenses. Actually, uh, operating expenses is different from direct expenses. Okay.
Okay, sir.
So you have to deduct this also. 1 lakh plus 30,000 minus 25 minus 5. You will get same amount of gross profit. That is 1 lakh. Okay. So if you got same net profit, then the ratio will be 1 lakh divided by 5 lakh into 100. So you will get you will get 20%. Okay.
Okay, sir.
Okay. So direct expenses is different and operating expenses is different. Let me explain this. Actually, you got confused in these two. Direct expenses means expenses which is related to purchase or factory. Okay. So any expenses which is related to purchase or factory expenses is direct expenses for us. Okay. Like I told you, if we purchase some product, we have to pay the carriage or freight on that product goods. Yes.
Yes, sir.
So that freight is our direct expenses. If we pay loading, unloading charges, loading means when product is loaded there, and unloading charges at our godown, then that is also our direct expenses. It is generally called wages. Okay, so wages and freight or carriage inward. There is two items: carriage inward and outward. Do you remember these two? Carriage inward and outward. You remember?
Yes, sir.
Yes. What is these two?
So carriage inward is a direct expense. Carriage outward is an indirect expense.
Yes, carriage inward is direct and carriage outward is uh, indirect. You can say the expenses is indirect, but carriage outward is also operating expenses. Okay.
Okay, sir.
Okay, because for business operation we are doing such expenses. So all the expenses which is for business operation is operating expenses. Okay.
Okay, sir.
Okay. So what is operating cost? There is a concept of operating cost also. Let me explain this to you. Operating cost. Now in operating cost, we include cost of goods sold plus operating expenses, or you can say other operating expenses. Okay. So in profit and loss account, whatever we write there, there are some operating expenses and some non-operating expenses. Okay. Both of
Okay,
these
sir.
are called indirect.
Okay,
Okay.
sir.
Expenses and non-operating expenses. Like if you take interest on loan, this is non-operating. Can you tell me why? Or should I explain?
So can you explain?
Okay. So if you take loan from the bank, okay, and you pay interest, okay, so you can run the business without taking loan also. That interest payment is not involved in any business operation. Yes or no?
Yes.
Yes. So that's why this is a non-operating expenses. Okay, so we don't include these type of expenses like finance cost or any other expenses like this. We don't include this in operating. Okay, so these are our non-operating expenses like salary payment and the carriage out what you told me, and like electricity expenses of office, printing stationery. These are also operating expenses, but indirect.
Okay, sir.
Okay, so that's why we have to deduct operating expenses also from the gross profit so that we can find our net profit. Okay.